The biggest financial crises in history. The financial world has experienced its fair share of crises throughout history. Some have had relatively minor impacts, while others have been devastating and have had far-reaching consequences. Here are some of the biggest financial crises in history. The South Sea Bubble, 1720. The South Sea Bubble was a financial crisis that took place in the early 18th century in England. The crisis was sparked by the South Sea Company, which was created to trade with South America. The company offered investors the opportunity to purchase stock in the company, which was expected to increase in value as the company's profits grew. However, the company's stock price soared to unsustainable levels, and many investors began buying stock on credit, believing that the price would continue to rise. When the company's profits failed to meet expectations, the stock price began to fall, and many investors were left with significant debts that they were unable to pay. The crisis spread throughout the country, and many banks and other financial institutions collapsed as a result. The crisis had a significant impact on the economy, and it took several years for the country to recover. The Great Depression, 1929 to 1939. The Great Depression was a global financial crisis that began in 1929 and lasted until the late 1930s. The crisis was sparked by a number of factors, including overproduction, overinvestment, and an over-reliance on stock speculation. As the stock market crashed, banks began to fail, and many people lost their life savings. The crisis had a ripple effect, as businesses went bankrupt and unemployment rates soared. The crisis had a profound impact on the global economy, and it took several years for the world to recover. The Asian Financial Crisis, 1997. The Asian financial crisis was a financial crisis that affected several Asian countries, including Indonesia, South Korea, and Thailand, in the late 1990s. The crisis was sparked by a combination of factors, including overproduction, overinvestment, and an over-reliance on short-term borrowing. As the crisis spread, currency values plummeted, and many banks and other financial institutions collapsed. The crisis had a significant impact on the economies of the affected countries, and it took several years for them to recover. The dot-com bubble, 2000. The dot-com bubble was a financial crisis that took place in the early 2000s. The crisis was sparked by a number of factors, including overinvestment in technology companies and an over-reliance on the internet as a means of conducting business. As the bubble burst, many technology companies went bankrupt, and the stock market saw significant declines. The crisis had a significant impact on the economy, and it took several years for the market to recover. The Global Financial Crisis, 2008. The global financial crisis was a financial crisis that affected the global economy in the late 2000s. The crisis was sparked by a number of factors, including overproduction, overinvestment, and an over-reliance on risky financial instruments. As the crisis spread, many banks and other financial institutions collapsed, and the stock market saw significant declines. The crisis had a profound impact on the global economy, and it took several years for the world to recover. Conclusion. Financial crises have occurred throughout history, and they have had far-reaching consequences. While some crises have been relatively minor, others have been devastating and have had a significant impact on the global economy. It is important for individuals and businesses to be aware of the risks associated with investing and to be prepared for the possibility of a financial crisis. Thanks for watching, like and subscribe, see you on the next one.